At 2:47 a.m., China's top exporters received a message that sent shockwaves through the global financial system. Without warning or leaks, the order was clear. Effective immediately, no more US dollar transactions. Within hours, treasury markets were in freefall, Wall Street scrambled, and the world was left asking, is this how the dollar's dominance ends? Not with a war, but with a silent financial strike. In April 2025, Beijing ordered over 400 state-owned and private companies to stop using dollars for trade, no exceptions. The result? A 12.4% collapse in dollar settlements within just 72 hours. This wasn't just about currency, it was a calculated power play. China's digital yuan is already handling $250 billion a year in transactions, from oil deals to tech exports. Meanwhile, the dollar's share of global reserves has fallen to a 30-year low. Even Saudi Arabia joined the shift, settling a full oil shipment to India in yuan, proof that the dollar is no longer the only option. This financial revolution is about more than just money. It's a fundamental shift in global power. For decades, the dollar's dominance gave America unparalleled influence over international trade and diplomacy. But as China builds its yuan-based financial infrastructure and nations increasingly bypass the dollar, we're witnessing something unprecedented: the decline of America's economic superpower status in real time. The consequences will reshape everything, from how oil is traded to how sanctions work, from which countries rise to which fall. This isn't just economics, it's the birth of a new world order, one where Washington no longer holds all the cards. The race for the future of money is on, and the stakes couldn't be higher. The fallout was instant. The 10-year Treasury yield spiked to 5.09%, a level not seen since the 2008 financial crisis. JP Morgan reported $212 billion in Treasury sell-offs in just 4 days. Why? Because China isn't just rejecting dollars, it's dumping US debt. And it's not alone. Japan, Belgium, and even Saudi Arabia are reducing their exposure. The dollar index crashed 5% in a week, its worst drop since the financial crisis. In Washington, panic set in. The Fed is trapped: raise rates and crush the economy, or cut them and accelerate the dollar's decline. While the US debates digital currency, China has already built the alternative. Meet mBridge, a blockchain-based system that settles cross-border trades in seconds, bypassing the dollar and SWIFT entirely. With 128 countries now trading more with China than the US, the yuan's influence is growing fast. Meanwhile, the US economy is shrinking, small business bankruptcies are up 18%, and mortgage delinquencies are surging. China, on the other hand, is signing trade deals across Africa, Latin America, and Asia, rewriting the rules of global finance. This isn't just a trade war, it's a systemic takeover. The dollar's dominance relied on oil, debt, and trust, and China is undermining all three. With global dollar reserves at their lowest since 1995, the US has no lifeline. The IMF can't force countries to use the dollar, and after years of sanctions and deficits, even allies are diversifying. What's next? More yuan oil deals, more treasury sell-offs, and relentless pressure on the Fed. For everyday Americans, this means higher borrowing costs, a weaker dollar, and a financial system that's being rewritten in real time. The question isn't if the dollar's era is ending, it's how fast. While Washington is distracted, Beijing is waging a financial war, and right now, it's winning. The global economy is shifting, and the rules are being redrawn. The only question left is, are you prepared for what comes next? Drop a comment. Will you diversify out of dollars? And don't forget to subscribe for part 2.